Thank you, Justin, for talking to Real Asset Media. You have recently released a report on the impact of COVID-19 on the real estate sector. First of all, there seems to be a lot of uncertainty in the market. Is it too early to see some data emerging in terms of the global outlook?
I think what we've started to see emerging within the assets that we're currently managing is some data around rent collections, around the level of impact that are happening at a sector level. And I think what's been providing even more anecdotal evidence is that it's coming about from the listed REIT market and some of the property companies that are providing trading updates, reporting, etc. So yes, we are starting to see some data emerge on that front.
Is the outlook, obviously the short-term outlook is not positive, but do you see some light at the end of the tunnel, as it were?
Look, it's too early to tell what the ultimate impact of COVID-19 and the coronavirus is going to be. I think what's become quite clear is where the short-term impacts are most acute. I think when we look to the hotel and retail segments, those are the areas where revenue has dried up quite considerably. For those assets that are remaining open, their occupancy levels are down quite significant. And I think those are the areas where we're likely to see the most significant short-term impact.
So what about the logistics sectors, which many have indicated as benefiting in the long term from this crisis?
Yeah, the logistics and I think also the residential sector are two areas that have some of the structural and demographic tailwinds behind them. These aren't new trends, but I think they're the ones that are providing a bit of demand side support to an otherwise challenging situation. I think COVID-19 has made home not only the essentiality as the roof over our head, it's also made it for a number of us that are able to continue to carry on working from a remote working from home type of situation. It's also our home office. And I think that essentiality is providing a bit of resiliency to the underlying demand for an occupancy on the residential side. I think the one area where we're seeing a bit of pressure is in markets where we've seen a spike in unemployment. The level by which incomes continue to come through and rental payments continue to remain current is starting to see a little bit of a slippage there. But overall, much better performing than the underlying hotel and retail spaces. And as you were asking, the logistics space is one that was benefiting over the course of the past 5 to 10 years from that whole internet e-commerce boom and the supply side restructurings that retailers and 3PLs have been building out to cater to the omni-channel retail model that we think is the successful business model going forward. I think there have been some regions, notably here in Europe and Southern Europe, where the lockdowns were first put into place, where we've seen previously reluctant populations in regards to adopting e-commerce and trying online sales. We're only seeing around 5 or 6% of overall retail sales in Southern Europe coming through an online channel, being forced in the context of the lockdowns to try to experience and to ultimately have some e-commerce success. And in Italy, we've seen usage rates increase up to 80%, and we're expecting to see the level in Spain also materialize there. So I think the tailwind that was already underway in some of the other Northern European economies, in the UK, in China, and in the US, is starting to accelerate and become more broad-based. So I think that's going to continue to support some pretty strong demand-side tailwinds within the industrial and logistics space.
Justin, thank you very much for sharing your insights.
My pleasure. Thank you.